All right, so previously we spoke about the different types of life insurance, and then we started to hone in on permanent insurance and having cash accumulation in there. So this brings me to the topic of the Index Universal Life. Index Universal Life is a beautiful product because it's specifically designed to help your money work for itself instead of it, depreciating in the bank. So the main things to understand about Index Universal Life is the name itself is telling you exactly how it operates. When you hear the word index, this is telling you how your money grows, because no matter where you put your money, it's only going to grow three ways. One's fixed. That means that it's safe and it's really not going to grow very much at all. So think of like a straight line going nowhere fast. The second way money is going to grow is variable. Think of the stock market, very volatile. So index is a hybrid of the two. That means it's safe, but it's also going to grow for you. So think of a staircase. That's how index work. So that's exactly how this policy allows your money to perform. The second thing to understand about Index Universal Life is that it gives you an opportunity to have tax advantage money. That means tax free. So think of a place where your money is going to grow and it's also going to be free from taxes. So, because there's a few things that's guaranteed in life. That's one, that we're all unfortunately going to leave this earth. Two, taxes is always guaranteed. But then three, market volatility is also guaranteed. So if you can put your money in a place where it can not be touched by taxes, you're operating just like the wealthy do. Because one thing that the wealthy does very well is make money, but they also know how to shelter it from taxes, or minimize taxes, I should say, right? So the IUL allows you to operate like the wealthy does in that aspect. The third thing to understand about it is when it is performing for you, and when I say it, I'm talking about your cash accumulation, is going to mimic the market. It's not in the market, it mimics the market. Very important to understand. And when I say that, I'm speaking about the floor and cap concept. So let's say the market, and when I say market, I'm speaking about S&P 500, just very basic, right? Let's say the market goes positive 20%. That means in your IUL, let's say you have a participation rate of, where your cap is like 13%. Okay, so if the market goes up 20%, you may only be able to experience and participate into 13% of that. Okay, great. I have an upside. Now, if the market was to go down 20%, your floor is 0%. So you don't lose money at all in that Index Universal Life policy. And that's a beautiful place to be. I get to participate in upside, but I don't have any risk of the downside. And again, that's operating like the wealthy do. They understand how to make money, but also shelter their money from losses and taxes. So when we dive into your money performing for itself, you also want to think about index, but I'm also going to teach you how to, access that money later in these videos too.